Hey guys, welcome back to my channel. My name is Brittney Bundles, and today's video is going to be all about lending options. So before we get into this video, be sure to give me a big thumbs up. Make sure to click the subscribe button, and let's get right into the video. All right guys, so if you are just starting up your business, or if you not even just starting up, if you have a business period and you're needing funding options, meaning that you need money, you need cash, you need spending power, this video is going to be great for you. I know you may be thinking, what are my options? What type of information do I need to look into? What kind of terms should I be focused on? And, things like that. So this video is going to help with that. Okay, so let's just dive right into it. So if you are starting a new business and you do, or not even starting a new business, but if you need money and for your business and you're thinking, like, what should I do? Where should I start? You're going to have pretty much three main lending options available. And the three main lending options are loans, lines of credit, and credit cards. These are very, very popular for any business owner. And they really help. So the first lending option that I'm going to start with is a loan. The reason that I start with a loan is because it's very, very popular. A lot of people, the first thing that comes to mind when you say you need money for your business is, okay, let's get a loan. Let me try to find out how I can get a loan. So when you get a loan, the institution is going to check your credit. They're going to check your payment history. They're going to check, your business income, your revenue, the profit, how long you've been in your business, how stable you are, how long you've lived at your residence, or how long you've been at your current business address, things like that. Ultimately, the lending institution wants to make sure that you're a good candidate for them to be able to give their money to and to pretty much make a profit off of you, because, banks, credit unions, they're businesses and they want to make their money too. So ultimately, they're checking to make sure that they're not going to take a loss on you, meaning they're not going to give you money and you're not going to pay them back. They want to make sure that they are going to make money off of you from the interest. So pretty much a loan gives you money up front, gives you a lump sum, and you make payments back over the course of your term. And the term is just how many months you decide to repay the loan back. So if you decided to take out a 36-month term, that means you're planning on paying the loan back in 3 years. If you take out a 24-month term, then you're planning on paying the loan off in 2 years. Typically, institutions will use the months as a reference to when you're paying back the loan instead of years. So you may not hear like an institution say this loan is for 5 years. They may say it's for 60 months, just to throw that out there. But yeah, so that's typically what it is. If you're needing money for let's say business equipment. So if you're like in construction, or if you're like in roofing, or if you're like in even in the hair business, if you need money for like different hair stands or to purchase inventory, and you're like, what, I need it. I wouldn't even say inventory. We're going to get into why I don't say a loan for inventory. But if the second option is a line of credit. Now the line of credit is revolving, meaning that it keeps going. There is not going to be a set term that you have to pay back this loan by. Revolving just means that it like I said, it keeps going. So you borrow some money, you pay it back. You borrow a little bit more, you pay it back. It just, it teeters and it goes back and forth like a credit card. So if you have a credit limit of 500, you spend 100, you pay that back, or you pay the minimum payment back with interest. So that's pretty much what the line of credit is. It's similar to a credit card. You just don't actually have the physical credit card. And actually now a lot of institutions are giving you a card for line of credit. So you can actually use a card. So it's pretty much like a credit card, but it's not. It's a revolving line that sits on your account. So if you need to transfer money to your checking account and withdraw it, you can. If you need to transfer funds to another place, so say you're purchasing inventory for your hair company, I would definitely go with the line of credit. And the reason that I said I wouldn't really do a loan for inventory is because a line of credit is something that, like I said, it's going to be revolving. It's something that you're going to continue to tap into and pay back. And inventory is something that you're not just going to purchase once and be done. Whereas equipment, I would take out a loan because you're pretty much going to invest in that equipment, and that equipment should last you for, ideally it should last you for some years. So it's not like you're going to be constantly getting new equipment, and it depends on the business too, because certain businesses, do need equipment quite frequently. So it just depends on really your business and really you. But for me, like for the hair industry, I would definitely recommend a line of credit for inventory, because like I said, you're going to continue to tap in that line. You're going to continue to spend it on that. You're going to continue to repay it back. And, so that revolving line would definitely be helpful. A line of credit is also very useful if you have employees. So if you do have a salon and say your employees are not self-employed, they're actually employees and you pay them, some months when your business is slow, instead of you having to pull from your personal savings, or instead of you having to pull money from another place in your business or even your personal account, you can tap into that line of credit and still pay your employees. Say, you need, I don't know, something at the spur of the moment. You really need more, bags to send out to your clients, and you're like, dang, I really don't have the money at this time. What should I, you'll have that line of credit to tap into. So lines of credit are very, very popular when it comes to different businesses. I would prefer a line of credit just because, like I said, I can take that money out and pay it back. I don't have to keep reapplying for loans. One reason that you don't want to keep reapplying for loans is because initially when you start your business, you may not be able to just jumpstart with a business loan, because a lot of business loans, if you look into them, they're going to want to see how much your business is making to make sure that they are going to actually get paid back, how much your business is making to make sure that they actually make money off of you. Everyone that gives you a loan, every institution, they're lending money with the expectation that they're going to make more back once they get it back. You know what I mean? So they may give you $5,000, but once it's paid back, they're expecting to get $7,000, depending on the interest rate and depending on the term. So they want to make sure that your business is making money and is able to do that. But when you first start off, it's very hard to show them that because you don't have any tax returns to show them, because you just started. You really don't have any receipts or proof that you can do this. So they want to actually see, okay, this person is serious, and they have it on paper that they're making money. So like I said, because we don't really have that when you first start off, you may have to apply for a loan in your personal name. So with that being said, every time that you apply for a loan, typically it's a hard inquiry. And you know what that means? Whenever there's a hard inquiry, it takes your credit score down a few points. So you can imagine if you're applying for loans every time you need inventory, if you're applying for loans every time you need to pay one of your employees, you're applying for loans every time you need additional items for your business or your store or for whatever, it can definitely have a negative impact on your credit score. So that's another reason why lines of credits are so popular in businesses, because you know that you may need to tap into additional funds quite frequently, especially in the beginning. And you don't have to worry about repulling your credit every time you need money. I mean, that money just sits there. All you have to do is worry about paying the money back that you used, and then you'll have it available again. So that's another reason why a line of credit is very, very popular. The third option that I want to talk about is credit cards. So credit cards is another option. It's revolving, just like the line of credit, meaning that you have a certain line of credit and you pay it back. You get it back, you pay it back. So there's no set term. Your credit card isn't going to expire in, like a year. It's not going to expire in like, 2 years. It's just a revolving line. So with a credit card, some of the perks about credit cards and why businesses have them is because you do get incentives back for using credit cards. So for example, certain cards give you miles. So a lot of business owners travel, a lot of business owners fly, different meetings, different conferences, different meet and greets, different, events. And so flights can become expensive when you're always taking them. So certain credit cards will give you incentives, give you free travel miles. Certain credit cards will give you like free or extra points if you purchase gas. So a lot of business owners like that, just because you're not only able to spend money like the line of credit, you're not only able to have additional spending power, meaning you can buy more than you actually have in your bank account. It also gives you that option to earn back, to win back. So that's one reason that a lot of business owners look into credit cards. Another reason is because, think about this. If say you have a business and you have a lot of employees and you're not in town, but you really need your business to have, new bags. They need bags, just standard bags for your customers. Your customers are coming in the store and they don't have any bags to leave to take out with their merchandise. They're just like, we're sold out of bags. What should we do? You're not going to, 9 times out of 10, you're not going to take a flight and go all the way back home, purchase bags, and then fly all the way out. It would be ideal to have one of your employees go ahead and pick up what the store needs. And so because they don't actually want to use the money out their pocket, and it's really not in most employees' job description to go ahead and buy items for the store out of their personal money, it's really good to have a few of your employees have a credit card. Now, if you do apply for a business credit card, of course, the business name is going to be on the card. You have the main card, and then you have your employees as authorized users, meaning that you set the limit that every authorized user has. So say you're approved for a $5,000 credit card and you have 2 employees that you trust like the back of your hand, and you're like, okay, these are the employees I'm going to give these cards to. So if I'm not here and I need you to purchase something, you can do that. You can purchase it right, with your business card. So you can say, you know what, I'm going to give Sarah $100 on her card. I'm going to give Bob $200 on his card. So they can't go over these 2 limits, but they have the additional, spending power to go ahead and purchase what the store needs so that the store can continue to run smooth even when you're not there. So a lot of business owners have credit cards, and a lot of business owners have lines of credit. A lot of business owners also take out loans, but like I mentioned, the loans are pretty much for like equipment, for heavy duty things that you're not going to continue to need frequently. You know what I mean? So if I need different, like I said before, hair stands, if I need different, I don't know what, wig heads, like the mannequin heads, if I need different, chairs, bar stools, if I need different styling tools to do my client's hair, things like that, more than likely that's going to be under the loan. But revolving things that I'm going to continue to purchase quite frequently, so like my hair, my different shipping attire, my branding items, things like that I'm going to continue to replenish quite frequently, like I mentioned, I'm going to look into a line of credit. If I am taking a flight, if I am, needing to purchase different things like immediately, like, just I'm at a store and I'm like, okay, these are things that I need. If I go shopping quite often and I'm like, you know what, I need to have a credit card so that I can pretty much stay organized, because not only is a credit card good for travel, points, incentives, and authorized users, it's also good with helping your business stay organized. So taxes is a big part of the year that a lot of business owners dread. Because you do have to learn to be organized. You have to learn to keep track of everything that you purchase for your business so that you can have it when it's time to file your taxes. But the credit card kind of helps that too, because you not only have to keep track of all your receipts, but you actually can just print out your credit card statements and take them with you. So you only want to make sure, if you do have a business credit card, try your hardest to only spend the credit card on items that are for your business. You definitely don't want to get into too much debt. Be conscious on how much you spend, period. And so those are the 3 different main options that a lot of business owners look into. I hope this really helps you guys. Hope it just kind of gives you some more insight on, what the difference between a loan, line of credit, and credit card is. And, what are some of the reasons that people choose to go with a loan over a line of credit, so I just hope that brings a little bit more clarity to you guys. If you have any additional questions, like always, be sure to leave them down below. Make sure to subscribe, and I will talk to you guys in my next video. Bye.